Hi everyone, and welcome to How to Make Huge Profits Investing in the Stock Market. My name is Greg Kilpack, President of Market Timing University. I'm really excited. This is my first video to upload to YouTube, and I hope you enjoy it. Now, I've been studying the stock market for 25 years now. I began in the late 1980s, and in that time I've read hundreds of books and literally tens of thousands of pages about the markets. I've worked in the financial services industry. I've traded and invested my own accounts. I've also worked as a swing trading coach. So basically, I've learned a lot about the markets in the past quarter century. The fact is that most people don't believe that stock prices can be predicted accurately in advance. Even industry professionals like your stockbroker don't believe this. But after 25 years of study, I can tell you with certainty that I've learned how to do just that. I will show you a little bit about how it works in this video. If you can predict stock prices, you can make big profits in the stock market. Now, I'm not the only one who knows that stock prices can be predicted in advance. I've read from several different authors. Each had a piece of the puzzle, but I've built on their foundations and developed my own strategies for larger profits. This is not a get-rich-quick scheme. This is steady growth in your investments over time to capture more of the bull market when it comes and to sell before the recessions come. What do you need to know to make big profits investing in stocks? The first thing you need to know is that nearly all stocks move up or down together over time. And that's because a growing economy is good for all companies in general. It's because there is more money in the national economy, and most companies that are established, at least, most companies will get a bigger slice of the pie because the pie is getting bigger. For the same reason, a declining economy means that there's less money in the system, and each company is likely to get a smaller slice of the pie. Yes, there are exceptions, but there aren't very many. Please note these dates. The market high came in October 2007. That's right about here before the chart begins. The market low came down here in March of 2009. And here we are at the present time, October 2012. Now, the Dow Jones Industrial Average represents what most stocks are doing over time. You can see at the high that the index was at 14,200. The low was down at 6,400. That's a drop of more than 50%. Ouch. Since then, the market has doubled, but it's still not as high as where it was back at the previous high. Now, at the high, this is the column of all these different stock prices at the high. You can see that column 2 at the low, every stock price is lower than it was at the high. Some stock prices fell a lot harder than others, but they all fell together. For example, Alcoa, well, first off, the market dropped about 50%, but Alcoa dropped a whole lot more than 50%. It was more like 80%. Whereas Priceline.com didn't even drop 50%. It dropped about 10%. Now, from the low to the high, every stock climbed, but some stocks went up a lot more than others. For example, Alcoa almost doubled, whereas Citigroup just about tripled. Caterpillar more than tripled. Okay, so stocks go up or down more than others, but they trend together in the same direction over time. And that's what our analysis shows here. Stocks trend together over time, but some stocks will climb or fall more than others. Based on this information, if you could tell in advance that the Dow Jones Industrial Average was about to fall 50%, just like it did in 2008, which stocks do you want to own before it falls? Answer? None. Kind of a trick question there. You don't want to own any stocks because prices for nearly all stocks will go down on average 50%. just like the Dow Jones Industrial Average showed us. Question number 2. If you knew that the stock market was about to go up in a new bull market, which stock do you want to buy? You want to buy the stocks that are going to go up the most. So what do you need to know to make this plan a reality? First, you need to know when the overall market is going to go up or down. My proprietary system shows you when that's going to happen in advance. It's based on economic indicators, market patterns, and signals. This tells you when to buy and sell. And frankly, that's what sets me apart from every other market education company. A lot of other companies will teach you good things, but they don't teach you how to predict the market like I do. Second, you also need to know which stocks to buy that will go up the most. That's going to tell you what to buy and sell. Now, the easy part is finding, what stock to buy and sell, because there's always going to be good stocks of good companies out there when the time is right. The hard part is the timing. This is what makes all the difference in the world. Through years of study, this is the part that I've found out, and it's critical to making money in the stock market. How much can you make if your timing is right? Well, Priceline, from the market low to the present time, has gone from 84 to 620. That's over 5 times your money in 3.5 years. That turns $10,000 into over $50,000. What about Caterpillar? Caterpillar has gone from $23 to $84 a share. That's over 3.6 times your money in 3.5 years. Look at that, Apple Computer. Apple went from $85 to $604 a share. That's 7 times your money in 3.5 years. Keep in mind that the average long-term growth in your return on your money is 10% per year in the stock market. So 7 times your money in 3.5 years is much higher than the market averages.